The SGX Nifty is a bit flat, just up about 10 points. I guess a lot of the move has already happened in our market, so let's see how things move. Prakash Diwan is now joining us, first up on the show. Prakash, good morning. Thanks a lot for joining us. The massive moves in the last 1 week have happened in the cement space. Of course, Ambuja and ACC have had their own reasons, but something like Shree Cement, after being thrown out of the Nifty, has actually rallied about 15%. Your views?
Good morning, Anuj. So I think cement is probably one of those major sectors that's going through a tectonic shift in terms of how revenues and how costs would pan out for the next 18-24 months. In the backdrop that demand is going to be extremely positive, it has been anticipated that all these capacities that are coming in will probably start coming into the market only post FY25. Until then, there's this huge demand uptick, which is going to be constrained by some sort of distribution and supply as well. Now, in that context, if you analyze, Shree was available, because of this Nifty shift. Out of the Nifty, there was some liquidity that got absorbed. And this has always been something which has been very low on float. And that's precisely the reason why the fundamentals were still attractive. The float kind of made it possible for a lot of institutional investors to buy in. And I think that tells you a story that very clearly cement is going to continue being one of those most favored sectors given the large market capitalization that it offers in some of the Nifty plays. And now with Adani's putting their weight behind the ACC Ambuja twins, it's only going to get even better. So my pick on the large cap remains Ambuja. Of course, it's rallied quite a bit, rallied hard from that 385 cutoff, which was part of the open offer. But smaller companies also will continue to spark up because of this potential M&A consolidation expectation, which is probably going to take pick up steam in the next few months. So it remains a sector to be overweight on in terms of a cyclical this revival. But you'll have to be picky because there are a lot of companies which probably don't offer that kind of fundamental potential to get re-rated as much as some of the other ones do. So be selective, but definitely I think we'll see a lot of institutional money chasing some of these good names here.
Okay, that's on the cement space. Prakash, hi, good morning. I wanted your thoughts on DB Realty because there's reports that Adani Realty could be looking for a merger. I know DB Realty has been a dead stock. I mean, it's been a stock not really in great favor, but they have good assets in the city. How would you approach this now from an investor standpoint?
Yeah, good morning, Sonia. Yes, so interestingly, DB was always a very good candidate to be acquired by any other player who had the execution skills, who had ability to brand it in a better way, get out of that tainted phase that DB has been going through. And we saw a lot of attempts being made in the past. And I think the clear indication was when some of the marquee names, individual investors, some of the largest investors, smartest brains in the investment community put their money into this name. But then nothing much happened. It's just that this newspaper reports probably brought attention back to the company. But look at where reality is heading, and especially the Mumbai-based stocks, Sonia. You look at Oberoi. I mean, their launches have been lapped up. Even if they've been at premium, the average rate at which some of the new projects are going are phenomenal. So, we've seen how the Worli project is kind of, building such quick traction. We've seen Century face the same thing with their Worli project. Today, Suntech is acquiring something which sounded a bit oxymoronish, Beverly Park in Mira Road, but then it tells you that there's enough activity around real estate in Mumbai. So if that were to happen, DB has great assets, as you rightly said. It just needs a great execution partner, and it's available at a fairly decent valuation from that perspective. I mean, it's just kind of 50 rupees of book value. It's available at 85, so it's really not out of sync. It just needs good execution skills. So if that were to happen, of course, it's going to be a game changer, and the stock could probably get out of this sleepy phase that it has been for a long time. But I would want to see something concrete happening just beyond this newspaper headline that's come through.
Akash, this is a stock that has eroded a lot of money for investors. I mean, the last 12 months, the stock is down about 20%. Do you think that its fortunes can turn anytime soon?
So, Sonia, one of the most promising things about this sector is that this sector might grow at a pace that is not very desirable. Or it's lower than what you would expect. But this is a pace. This is a sector that is bound to be a sunrise sector of sorts. I mean, there's no way gaming cannot start padding up its revenue growth significantly in the years to come. It's just a question of at what cost does this growth come? And as the management was very clear that we don't want to keep on burning cash to just for the sake of increasing revenue, but as and when that revenue grows, and we've seen that in a maybe not comparable way, but in a indicative way of sorts with Delta Corp. Some of their online gaming versions have kind of really grown significantly in the last few years, not at the pace that was expected to begin with. But it is a stock that's probably expensive, but it's a stock for the future. So you want to buy it, you could probably buy it at lower levels. It's probably been priced very steeply when it came with the IPO, and that's what you're paying the price for. But at this point, I think it's definitely got a lot of things going for itself. And news like Google Play getting onto this particular segment, as I mentioned even on Friday, is a positive, and you'll probably see much traction from some of its verticals that this company is into. But growth will come at a pace that's probably lower than what the price tells you at this point in time.